Welcome back. Under Armour is up 42% year to date, but Susquehanna says to sell the rally. They reiterate their negative rating today. It's our call of the day. It's Sam Poser, the analyst. I've had him on before. He has a sell on this stock. What do you do with this?
I ignore it.
You sell it?
I ignore it. This is a
You do?
This is a restructuring story. Sam, by the way, is a great analyst.
He says restructuring efforts and updated guidance do not equal improving fundamentals.
So it's a restructuring story, and I don't think you're going to see any of the results this year. I think that actually the announcement they made yesterday in terms of increasing their restructuring program, the size of it, and they're going to take a bigger charge. I think they're clearing the decks for to get all the bad out in 2018, so you have a much cleaner story in 2019. The story is you have new management. You have a new president, a new COO, a new CFO. These guys are adults, and they are actually very complementary to the CEO, Kevin Plank, right? So they're working together as a team. There's a lot of overhead. There's a lot of cost cutting they can do. And I think they're getting better on the supply chain and getting products out quicker. And that is going to manifest itself in 19, not in 18. So I see why Sam is negative this year.
Well, he's been negative.
Although he's been wrong. But I think the real story kicks into gear in 19.
But is cost cutting really what's ailing this kind of inventory management the issue, or is the issue that the consumer is simply not as excited for their merchandise as they used to be, and other forms of athleisure have just lapped, including other stocks that you own? Isn't that the real problem?
No, it's kind of both.
The shoes are not good.
No, but if you listen to Dick's and if you actually listen to Kohl's, the product is actually selling, and Dick's actually said 19's product looks great. So I think they had product problems. They had inventory problems. Right. They couldn't get the stuff to market fast enough. And certainly there is competition. They're not in the same league of Nike. I don't expect them to be in the same league as Nike.
Are they still, promotional like they've had to be?
They're certainly promotional, but I think that they're getting less so as that inventory works down. Inventories are still high, and they're working that down.
What about versus Nike, best performing stock in the Dow year to date?
That one makes me nervous. I own that too, and that one makes me nervous. Every single day there is a positive note and a raising of a target and saying it's just a wonderful company. And by the way, it is, and they are humming on all cylinders. However, the stock is not cheap at all. I don't want to get off of it, though, because I do like the product cycle story, and I do like the growth and the momentum there. I just think the turnaround at Under Armour is more interesting.
I guess my point is, let's just call both stock performances even, okay? They're roughly 40% on the year. One company's been crushing it. One company has not. So which stock price is justified to be where it's currently trading today? You're making a much bigger leap of faith, are you not, with UAA than you are with NKE?
When I have made money in retail, it's when the margins are depressed. Margins at Under Armour at 3%. At Nike, they're at 15%. So I think I am making a bet that this new management they're not going to get to Nike's levels. No way. But even if it goes from 3% to 5%, that's huge operating leverage. And their balance sheet, they improve their balance sheet. They execute better. You get confidence from the street, which there's a lot that don't have confidence in it. And oh, by the way, you have a catalyst. They have a December 12th analyst day. So they're going to go and showcase all their new products.